Hello and welcome to this week's crypto update. So what's happening in the macro and how does it affect crypto? Well, very much it seems to be a case of it's macro versus crypto at the moment. What do I mean by that? Well, so many positive things are happening within the crypto space, but I suppose, as I've been saying for a long time, the macro has such a huge effect on what's happening in the economy, what the Fed are doing, etc., etc. But there's now something even bigger than the Fed that tends to move the markets both up and down with equal movements. But what we've seen is since early morning, Saturday morning last week, we saw 20 billion wiped off the crypto market. That's the biggest correction in crypto's history. It's bigger than anything that happened with the likes of the FTX crash. It's enormous. It's a complete wipeout of longs and leverage. Bitcoin plunged 13% in an hour. Huge movement. It went from 100. It had already dropped from like 126,000 to 122, and then in the matter of an hour went from 122 all the way down to 102. A huge correction. What caused this? Well, simple. Just as simple as a Trump tweet. So what was the precursor to this? So the Chinese early last week came out and said, we've got these rare earth minerals. We have a monopoly on quite a number of them, 7 in particular. These 7 are used in everything from building mobile phones, various technologies, lots of military use case. And they're basically saying, we're going to really hold this back and basically make people suffer. Trump took massive exception to this, came out and said, we're going to do something about this. We're going to have to, see where we go here. The market came down a little bit, but then he came out and said, okay, 100% additional tariffs on everything Chinese. The market absolutely plummeted. Why? Well, number one, because they see this as creating huge uncertainty once again. We've seen this happen before, back in April. We see it happening again, this massive correction off this news. People are starting to wonder, okay, is there going to be a full-out trade war again between China and the US? And so there's lots of volatility there. But added to that, there was a huge amount of long positions. This is where people are betting on Bitcoin going up in value. And so when it comes down, they get liquidated out of those positions and lose a crap ton of money. That's sort of the additional piece on top. So you have this announcement by Trump, which creates volatility. And then once it starts knocking out some of the longs, it creates a cascade effect and it happens in an instant. And this is why it fell so far in an hour. On top of that, there's a lot of talk that the oracles and where the oracles get their pricing from, which is from a combination of different centralized exchanges. And centralized exchanges is actually in their interest for a lot of these longs to get liquidated. That's how they make a lot of their money. There's huge question marks now on should the oracles that are pulling in that information have some way of verifying and checking it first prior to it being made public, because as it stands, centralized exchanges can manipulate at huge levels. They know where all the long positions are. They know how to liquidate them. They can buy back in at the bottom of that flush out and make huge money on the turn up. So lots of question marks about that area of crypto, but the centralized part. On the other side, first and foremost, we saw that excess leverage being washed out. And as Vettel Lunde puts it here, historically, such deleveraging phases lead to short-term stagnation and cautious trading. But they also tend to mark exhaustion points, creating fertile ground for long-term recovery once stability returns. In English, that basically means this big flush out, will lead to probably a little bit of sideways for a while until it finds its feet. But once it does, with all those long positions taken out of the equation, it creates a really strong platform on which a bull market could potentially move from here. But of course, that was out in the last couple of days. The positives that came from this is the DeFi platforms, the decentralized exchanges, the lending platforms performed excellently throughout this massive washout. No failures, worked really well. So what does this tell us? It tells us that while the macro is causing a lot of this, the actual DeFi structure and the decentralized part of crypto worked really well, and it also showed the flaws in the centralized parts of crypto. So lots of lessons to come from that. What was the overall outcome from all of this? Bitcoin only dropped 15%. What's the point in that? 15% sounds like a lot. Well, not really if you look back in cryptos and Bitcoin's history. And it's settled at 112. So as Hunter puts it here, 112,000 Bitcoin after a major sell-off. And remember, 5,000 Bitcoin in March 2020. Remarkable how far Bitcoin has come. The point he's making is here, we've had this massive flush out and Bitcoin's at 112,000. It wasn't that long ago the thoughts of Bitcoin being over 100,000 seemed far-fetched. Well, after a massive pullback, it's now still at 112,000. So I guess that's, again, another positive in the overall view. However, it is no longer at 112,000. One other big piece of news in crypto before we move on, Ethereum to onboard 1.4 billion new users as Chinese Alipay megacorp launches its own layer 2. The Ant Group's aims to redefine digital finance by bringing real-world assets on-chain as it launches an Ethereum-based Layer 2 network. The idea here is if only a small percentage of these people come onto the chain, that it would, only 10% would bring this and surpass it over base Layer 2, for example. So it's another huge momentum shift for crypto and another way of potentially bringing in, hundreds of millions, maybe even billions of people into crypto. But of course, as I say, crypto didn't just stop there and the crash didn't just stop there because once again, macro strikes again. Not a crypto issue, but actually traditional finance issue. Banking showing weaknesses again. So investors once again sense not all is well within the regional banks. First, Zions Bank Corp reported had to write off 50 million in bad loans tied to borrowers facing legal troubles. And then Western Alliance announced that it had filed a lawsuit in August that alleged one of its borrowers had committed fraud. What did that mean? Both stocks fell significantly, one 13%, one nearly 11% on Thursday. And so what this is showing is not just that these two banks that there's an issue, but maybe there's something wider. Because many people have memories of March 2023 when Silicon Valley Bank collapsed in what turned out to be the third largest banking failure in US history. So again, the fear is maybe this is now showing cracks and weaknesses and there's more to come. And on the back of that, the stock market, all risk on assets are absolutely pulling back significantly. And of course, Bitcoin has again tumbled back down and come down as far as about 105,000 right now. So it wicked down to 102,000, went strongly back up to sort of 111, 112, maybe even as far as 116,000. It didn't hold, started to show signs of weakness, and once again off the back of this news, it's come back down to about 105. It's been as low as 103.5 on the wick. Show you on the charts in a second, but certainly there's a lot of weakness being shown now in all risk on assets. And so JP Morgan CEO Jamie Dimon came out and he didn't exactly come out and make people feel any better. He said, we've had a credit market bull market now for the best part since 2010. These are early signs there might be some excess out there because of it. If we ever have a downturn, you're going to see quite a few more credit issues. In other words, he's saying, okay, there's some signs of weakness. I believe there's going to be much more of them, and there could be actually a much bigger pullback with all of this. So I guess the point in all of this is there's absolutely huge volatility out there. The market's terrified, but Bitwise says that's exactly when smart money steps in. Bitcoin's fear and greed index just crashed to 24, its lowest level in a year. Last week it was sitting at 71, which is the opposite, the greed. Now it's full-blown fear. So what's going on here? Well, number one, just a week ago, before the first crash, the fear and greed index was 71. This means that people were really positive about crypto, very optimistic about a bull run. Everything was lining up and were ready to go. Literally a day later, we had the first crash. Today, we've had the second crash. We're down now around 105, and all of a sudden, we're in full-blown fear. What caused it all? Well, it started with a tweet. Then there was a recovery tweet from Trump. And now we're seeing a lot of posturing going on ahead of when both President Trump and the President of China are going to meet up in about 2 weeks' time. They're posturing. They're starting to try and position themselves ahead of a negotiation. With this creates massive volatility. All the while when there was huge short or long positions in place, they got liquidated with huge pullback. Now we see banking weakness, another big pullback, and all the while we have this uncertainty going on as to what's going to happen between these two nations, the two biggest superpowers in the world. And so that fear is out there. And so the question is this a buying opportunity? And certainly, if you're to look at some of the projects that are out there, they look to be real value right now. Let's just have a look at some of the charts. So if you look at Bitcoin, you can see this bar in here I drew when we were back here. And Bitcoin was coming in around the 120 plus mark. I felt it would have to come into this box before we could take off again. And it made its way down, kept strong, eventually hit off a couple of times, came into the box, held its line, back up, touched off it again, really strong run. Then we had this huge pullback, and not only did it go into the box, it went right through it, but recovered really quickly above it again, tried to hold, and now not only has it come into it, it's come right through, showing real weakness. Like I say, usually when you have these big long wicks, more often than not they get filled. In other words, it comes back down to that level again, and we're seeing that starting to happen. 102 was the bottom of this wick. This new wick has come down to 103.5. We're currently at about, actually 104.5. It's come down even since I started this video. So huge signs of weakness here. There's every possibility that it at least comes down to this wick, but I think it's quite likely now we come back down to this box, which is that sort of 100 grand to 97 grand area. It's quite likely we at least visit that and then see whether it shows weakness or not at that point. But of course, predicting what's happening with Bitcoin or any other cryptocurrency at the moment is a fool's errand. Why? Because literally, as we speak, Trump could be putting out a positive tweet or a negative tweet or who knows what. And the market is moving just on that. You know, there's a lot of memes out there now where they're showing people who, you know, in the past, someone looking at crypto was looking at all the fundamentals and the charts and all of this, trying to work out what's going to happen next. And now that same person in the meme is just looking at Trump tweets, because it just seems that the market is simply moving on that and trying to figure out what's going out on. Otherwise, it's, like I said, it's pretty much a fool's errand. Where does Bitcoin go from here? Of course, no one knows for sure. We see the likes of Ethereum, which of course will be a lead indicator for all coins, also showing that weakness. Again, its wick down went to, you know, just under 3,400. Again, likely to go there, but will it come back down to this box and, you know, try and settle at that point and find a firm footing, or will it show more weakness from there? Of course, no one knows for sure. But if we go in and look at the top 100 cryptocurrencies here, you can see Bitcoin is down 13% in the last 7 days. If I just click on that, you'll see the ones that have gone down the most. And if, as you go through this, you can see the value that's out there now in some really good projects. Obviously, you can decide which projects you think here are good or not. But, you know, a lot of people were talking about things like Pump Fun. You know, there's 36% off that right now, the likes of Pudgy Penguins, you know, if they're your cup of tea. But if you go down to ones that we know are really strong assets, and you look at the likes of Chainlink here, Chainlink is down 27%. It's an oracle. It's the article of the crypto space. It's a really solid project, but yet it's 27% off. Is that a good buy right now? And just underneath that, you'll see Aave, the biggest lending platform protocol in the space, down 26%. Uniswap, the biggest decentralized finance project out there, down 26%. So huge discounts on those. But of course, the big question is, would now be the time to buy if you're looking to deploy into crypto? Well, certainly you're getting big discounts. Could they become more so? It is possible. And so if you are going to buy into some of these, we certainly would say DCA is your best friend. In other words, put some in now and wait, because there could be even better value. If Bitcoin continues to come back, which there's a very strong likelihood of that happening, then these will get crushed even more. And of course, if you go further out the risk curve, if you're looking for ones even further out the risk curve, they're down by 40, 50% and more. So there's huge opportunity out there. It could come back even further, but of course that may not happen. Like I said, there could be a positive tweet in 5 minutes time and Bitcoin could take off. But ultimately, is there good value out there right now in really good projects? I believe so. Is there the potential for it to be even better in the not too distant future? Absolutely. My gut feeling is there's going to be plenty more volatility in the market over the next couple of weeks ahead of this meeting, as they start to posture ahead of each other in order to try get the best negotiating position. Then I think that it's highly likely we see a really strong positive agreement between both countries, because they both need each other despite what they might say. At the same time, I think we're going to see interest rates reduced, and so I think we have a lot of the potential ingredients to have an unbelievable bull run. But of course, it's all dependent on what happens in that meeting, and of course the general economy. Will there be more banks? Will there be more bodies float to the surface? There may be so, and of course, like I say, I think there's plenty more volatility to come. Watch this space and talk to you all on the next one.